Andy Marcel, I'm sure a lot of people here must know Andy. He's the CEO of the Reinsurance Solutions globally.
Yeah.
Globally, Aon. You're a very busy man, and we really appreciate you joining us. So this session is about the revolutionizing of risk transfer. And before we go into that at all, let's just set the scene. What's going on in the world of risk? It's a complex world. There's lots of different things. If you're an insurance company, what are you worrying about?
What a great question. So actually, I do run the reinsurance, but now they put me in charge of insurance as well. So now I'm totally confused about what my job is. But the world of insurance and reinsurance has got somewhat more complicated. We have a whole bunch of sort of client advisory boards, and we chat to the CEOs of a whole lot of our clients. And so what's bothering them? So on the one hand, they got global trade, political risk in ways that they've never had it before. Then they've got the climate change issue, which if you're a reinsurance broker is an opportunity as well as a threat for our clients, right? Trying to figure out how to model the changing risk, particularly secondary perils, flood, wildfire in particular, and now in the US, severe convective storm, so that's a huge issue for them. And then it gets into technology, and in the notes I was given, I was supposed to talk about AI, but AI is like, it's topical, but it's kind of a whatever for insurance companies, in my opinion, because technology itself is a bigger issue for insurance companies because they're facing digital disruption. And if you have a whole bunch of agents, they're thinking, am I being disintermediated because AIG or Zurich are spending, $500 million each on science and how to access risk, and I'm a regional or a mutual insurance company, and I'm not doing that. Simultaneously, am I being out-selected and I don't even know it? So what's going to happen to me? And so those are the really big trends that are driving sort of fear and opportunity in the insurance market.
And then, so what should an insurer be doing about it? They've got a lot of risks to manage. They've got balance sheets to protect. What's the key things? I mean, with your reinsurance solutions hat on, what are you telling people to do?
Well, the thing has driven, the reinsurers and the insurers have, up until last year, have failed to return the cost of capital, particularly the reinsurers, to their investors. And what's mainly driven that has been climate, right? And so understanding climate risk, modeling climate has been the biggest single challenge that they face. So in that sort of, world, so we build a ton of models, we license all the models. We've been building sort of interactive decision tools around climate for our customers, but actually embedding them into sort of the capital architecture of the company and how you make decisions, around managing that risk is magnified because, I know it's a longer answer than you wanted, but I'm trying to keep up with the pace of being cool with the multicolored microphone. But it's, a year ago when the market all shifted after some of the big losses, the retention. So if you think of a property cat reinsurance program, right, it has a retention. So all of you are insurance people, but you all buy car insurance, you have a deductible. Like the deductible on a cat program could be like $1 billion. But whatever it was before, it was usually, at most programs attached below the 1 in 10 year event, right? But that 1 in 10 year event, right, has been magnified by the change in the secondary perils. So the reinsurers are like, I'm not dropping down 1 in 10. I'm going to come in at 1 in 15. Really, I'm interested in 1 in 20. So these companies suddenly had huge amounts of net retentions to, catastrophic loss that they never had before. So their ability to manage earnings and manage capital was completely stressed. And so helping them navigate that, finding new ways to bring capital to the industry is what we've been focusing on. And those are the solutions that we've been bringing.
So it sounds a bit like Aon as old-fashioned broker. Not that you were ever an old-fashioned broker. Aon is a very modern and up-to-date broker. You're becoming more and more of a tech, modeling, software, data company.
Well, we say that. So, in reinsurance, right, we get paid to do the transaction. And, the Aon colleagues are like, what the hell is he going to say next? Right? And
I'm thinking that as well.
But so, when you want to make decisions about risk, you've got to bring in better tools, right? So, what are Aon doing about it? the first thing I did is I bought a software company called Tyche, and we embedded it into an architecture called STG, because in the end, in order to differentiate and solve client, problems, you need to give them, solutions and advice linked together with technology, with software that enables them to make real-time decisions, whether it's underwriting, whether it's how you link your underwriting decisions and claim outcomes to capital. And if you don't do that and you don't make it real with advice, then I'm ultimately going to be disintermediated, because all I'm going to be doing is, providing a transaction, which is great, by the way. That's how we get paid. But that's all I'm going to be doing. And eventually, somebody's going to disintermediate me. Somebody, really smart at a company like this is going to figure out how to transfer risk more effectively than we are. So you have to stay ahead of the game. So, the rule of thumb is anticipate what your clients need, understand their issues, and bring them solutions so they can continue to operate their business, and then you'll be relevant as the market changes around you.
Use the acronym STG there. Tell us what it stands for and what's in it.
The Strategy and Technology Group. What's in it is a capital tool that was Tyche and Remetrica, which is going to be merged together. The Aon pricing platform, which is, how do you make risk decisions and connect to underwriting decisions and feed that back to your capital model with a library of tools around product-specific analytics. There's actually probably not that interesting to all of you, but I find it fascinating, a thing called Pathwise, which is actually had the first, it's about 5 years old, had the first NVIDIA chip in it. It's a GPU-powered, decision tool for life companies, originally built to hedge variable annuities. And then we have a whole bunch of amazing insurance consultants, which you're happy to chat to, who are in the room, and then actuarial consulting. That's sort of the core of it. We merge it together and split it between P&C and life.
I did warn you that we'd go off script at some point.
Okay, go for it.
But in that world, how don't some insurers will insist on doing that stuff themselves, and some will be happy to subcontract some parts of that. How do you see that? In other words, what are the things where the insurance and your customers will trust you and where they won't, or where they see you being able to do it better than they would?
That's a great question. So, in the global client space, they have a huge amount of architecture, and the best insurance companies in the world understand their data and use their data to make great decisions. Without naming, because if I name who the best ones are, I'll admit some of my clients, and that would be terrible, right? But who watches Shark Tank? All right, me too. I love that show. You watch Shark Tank? No. Okay, there's too many Brits here. But for all the Americans who watch Shark Tank, they come in and they're sort of innovators and entrepreneurs trying to get money from a bunch of so-called sharks. They always ask the same question. So, you've got a product, okay, we see it looks cool, fine, whatever. How much does it cost to deliver, and how much have you sold? So insurance is the one product that you don't know how much it costs when you sell it, right? So anything that you can provide to an insurance company, no matter how sophisticated they are, to help them understand the outcome of what they're selling and how they should price it when they sell it, you're going to get their attention. Right, so relevance for us is entirely in that space. And if you can extend that out to claims, how do I improve the outcome? And if I can extend that to distribution, how do I access more of the risk that the software has told me I should be seeking? And what is the most cost-efficient way to access that risk? They'll pay attention to you. So when we think about what we invest in, we categorize it into those buckets. And in going totally off script, Insurtech, right, as a category, the ones that succeed or fail, as I observe that marketplace, the insurance companies in particular, right, the ones that focus merely on distribution and see premium as revenue, not as actually the outcome of what they do, and understand they're taking on a ton of risk when they're taking on premium, and actually understanding how to manage the risk against capital, how to make the outcome better by investing in their claims architecture, right? Those are the ones that succeed. The ones that are chasing distribution as a way just to generate premium are the ones that fail. And you can name many of them, but I won't do that here.
We're going to record that and play it back, because that was as good a summary as what's going on as I've heard for a long time. Well done. Last question. Other than come and talk to you and your colleagues at STG, what bit of advice would you give to insurers in the sense of preparing themselves and managing themselves for what lies ahead?
You know, I can say, hey, come talk to Aon and we'll solve all your problems. But, you know, as we at Aon, we've built all these tools. Now that I'm running the retail business, we've built a ton of like analyzers of property, cyber, D&O, et cetera, to help our brokers articulate the value to the original insureds. But, you know, as we spend the money in transformation, which is on our Aon Business Services technology platform, you know, we're going to invest $1 billion, right, over the next 3 years in improving that. You know, one of the things that's crippling, right, is how you get data from clients. So how you ingest data. So we've been telling the brokers, you know, when you get data from a client in the form of a PDF, that's really not helpful. That's really expensive, and we can't use it. Insurance companies, right, are crippled, right, by their data architecture, by the platforms that they have. And if they can't change their platforms fast enough, they can't use the insight that technology can give them. And so that is our advice, is to make sure that you invest in your data architecture first and foremost, because if you can't do that, you'll never understand the costs of what you're delivering, what you're selling, and the ultimate outcome.
Was that pre-prepared with your other sponsors? That was just such a gift.
It's good, wasn't it?
Such a gift.
Right.
Well done, you. Andy, that was really good. Thank you very much. Thanks very much for joining us. It's been a pleasure.
You're welcome. Awesome. Cheers.